Well, the most exciting news out this week was probably housing. We had housing starts for June up 6.9%. That was more than expected. 760,000 houses when they expected 750,000. Permits were down, though. Remember, housing permits, construction permits are more important because that tells you the health going forward. It's a forward-looking economic statistics. They were down 3.7% to 755,000. So that was a little bit of a concern, and the existing housing sales came out yesterday were down 5%. So that was a little concern. But when you look deep into these reports, it does clearly point to a better housing market. Inventory was down a little bit, prices were up a little bit, and there's a lot of activity going on. So I think we are seeing the bottom of the housing, and it's going to actually add to the GDP this year, rather than either being flat or detracting from our GDP. And I do think the housing is going to be the bright spot of the year because everything else is still showing slowing economic activity in our economy, still showing it. Why did the market rally? Based on kind of not very good economic statistics. It wasn't disaster economic statistics this week, but just not very good. Well, probably two reasons. First, earnings have been, well, I'll not say great, but they certainly have been better than expected. I think that the market expected much worse sales and earnings reports coming out and much worse projections for the rest of the year from the CEOs. It's not that we're getting great numbers. No, I'm not saying that. We're not getting great numbers. Earnings are less than last year, sales are less, but I do believe the market expected worse. It's always about expectations about the market. And you got to remember, earnings are still growing. And remember, last year, the index of the S&P 500 didn't do anything. The Dow didn't do anything. So all the earnings that we had last year, all those good earnings, really didn't get built into the price of the stocks. And that's one of the reasons we had a nice rally the first 3 months of this year. But then we've had a 10% pullback and then a little bit of recovery back. But we're still, we still haven't got back to our old highs of this year. So earnings coming in a little bit better than expected, and earnings still coming in, is driving PE ratios down. Not fast, but down. And we already have a market that's not overpriced. So that's a good thing. Inflation's still not an issue. We don't care about inflation. No one cares about inflation. The other reason why I think that we might be seeing why the market is acting better than it should, based on economic numbers, is that since the economic numbers are weak, you got a kind of a dichotomy. Weak economic numbers gives the investors and traders confidence that QE3 is coming. And they're thinking, well, QE3 is going to benefit the economy and us and the stock market very well. Maybe that's what they're thinking. But again, it could be that every country in the world is trying to stimulate growth, and the stock market is taking comfort in that assuming that eventually work. No one really knows. We're still in the summer. I still think we need to be cautious, and that's the attitude we're going to take here at KPP Financial.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.